I think the economy grew mostly because of the tax cuts, not despite the tax cuts. The regulatory relief is certainly a big positive, but how to quantify that is very difficult. And big energy investment is because oil prices are higher, not because of any changes in policy there. So the question is sustainability. The graphic said maybe he thinks that there's 4% sustainability. I think that's unlikely. I think maybe the rest of the year, maybe 3%. But in none of these calculations, and you were asking the question,
better than 2.
It's better than 2, but in these calculations, we're not taking into account what's the impact going to be on tightening monetary policy, which you brought up. We had wages that were up 2.7%, average weekly earnings in June. CPI was up 2.9%. Well, can you sustain 4% consumption growth when your wages are going down on a real basis?
Yeah, Ron?
Well, I'd take the numbers apart a little bit differently than Peter just did. I mean, a full 1 percentage point of the 4.1% came from a surge in exports as exporters were trying to get around the retaliatory tariffs that just kicked in recently. So let's subtract 1% from that. Then when you look at government spending, that was a component as well. And that, despite what Mr. Mulvaney had to say, is part of the stimulus that we got from very large budgets that were passed over the course of the next 2 years.
2.1% or something.
Yeah, and final sales were very good. So the economy's strong. Can't quibble with the fact that it's strong. The sustainability question is key because once these export gains roll off, we'll see a reduction in GDP next quarter. And the key question is can the consumer keep going? I don't think the tax cuts are affecting individuals nearly as much as they're helping profitability. And those are two wildly different things.
On the business side of things, though, shouldn't we expect to see, I mean, when companies bring back cash from overseas, they don't spend it right away.
Well, every dollar that has come back from overseas has gone to share repurchases.
How do we know that
buybacks.
that wasn't cash already sitting here on the balance sheet or cash that was generated on free cash flow?
A lot of the cash sitting overseas was really spoken for through debt. When you look at Apple, they have all this cash, but they have $100 billion in debt. So they sort of front-loaded the repatriation in a sense.
Yeah.
So do you think, Peter, that this, when you're looking at all of this, was this what you would call a high-quality number when you look at GDP? Like we look through earnings reports and we say, well, is this a high-quality beat, a low-quality beat because of the noise with the trade and the tax cuts? Were they in there, were they not?
Well, business spending and consumer spending obviously being the two key things. You know, they were pretty good. I mean, look, we've seen an improvement in business spending, not because of confidence on the administration, but because there's an actual tax incentive to increase capital spending this year. So we've seen a response to that. You know, the issue with trade, it was sort of offset by this big decline in inventories. They'll probably reverse in Q3, but even balance each other out. So Q3, Q4 is really going to be our business is going to continue to increase spending, and our consumers going to continue to increase at the pace that they're spending. And I think that's the question, at least on the consumer side, maybe less on the business side.
The one thing I would bring up is the market's reaction to everything we've seen in the last couple of weeks. Like the first quarter, we're not getting a big positive reaction to earnings. Facebook obviously was a big disappointment in there, along with some other companies. We're not getting a big reaction to the GDP numbers. And so the market tells me that they're baking in something a little bit differently than sustainable 4% growth over time. And by the way, the corporate share of government revenues is at a historic low at 1.3%, and the deficit's about to hit $1 trillion. So I think markets have a lot more on their mind than just the numbers we've seen today.